So with all of that, I just want to tell you the country has never been in better shape. We went through this short-term disaster with the Democrats because they thought it would be good politically. And it's an honor now to sign this incredible bill and get our country working again. Thank you.
So that's it. The government shutdown is over. And you know what that means? Well, if you don't know what that means, let me summarize it for you in one word. The government shutdown is over, and now we're getting liquidity. Lots of liquidity. I'm going to show you exactly where the liquidity is coming from and why I think that this government shutdown is going to help, or the end of the government shutdown is going to push the markets higher from now and right into December. So today, guys, big show. Government shutdown over, and all we're going to talk about is the inflow of liquidity and exactly where it's coming from. Let's go, guys. You know, when Trump signs this off, you know what it reminds me of? It reminds me of when I sign off leave requests for people who want to take like vacations or annual leave at Banter. I really think it should be done in this kind of setting. And then as I sign off the leave requests, it should be like everyone like clapping. Like, what do you think, bro? All right, so we've got a big show today. We're talking about the end of the government shutdown and all the liquidity that's going to be coming into the market and exactly where it is going to be coming into the market. And I think the market really needs this liquidity because right now the state of this market is, it's not in a happy place. It's really not in a happy place. I don't know if you guys noticed, but you're getting these like tiny little moves in Bitcoin from like 103 to 105. And by the way, I'm going to show you why we're getting these moves down every time the US market actually opens. I don't know if you've noticed, but we've been on this like pattern where every time the US market opens, the candle goes down. Like we trade well, we're going to the 105s and 104s and 106s, and the US market opens and then we go down. So I'm going to spend some time actually talking about why that actually happens. Anyway, today, big show, guys. Before we start the show, though, guys, if you're not already subscribed, please do me a favor, subscribe to the channel. I did notice today that quite a few of you aren't subscribed. If you are already subscribed, just help us with a little bit of distribution. Smash the like button. It really helps us a lot. Got a lot of alpha for you today. Hardest, nice button, bro. That's such a cool button. Anyway, let's get into it. So as I was saying, you've got a pattern now in the market where every single time the US opens, basically it takes down the whole market. And we're also in this kind of, I want to say unhealthy, but maybe it actually is a very healthy pattern where every little move down liquidates people. It's like, it's the craziest thing in the world. This little move down yesterday, and this wasn't a big move. I mean, the market went from top to bottom from 105 all the way back to 101. And in that move, $500 million basically got wrecked, and 144,000 traders actually got wrecked. And I think what a lot of people don't appreciate is the damage that was actually done by October 10th. October 10th literally liquidated anybody who wanted to take leverage. Basically got liquidated on October 10th. Remember that was like a $20 billion liquidation. It was over 1.6 million people liquidated on the first day of that mass liquidation alone. And so I think a lot of people underestimate the long-term damage that was done by that mass liquidation cascade. It's going to take us months, maybe even years, to bring that amount of money and that amount of traders back into crypto. And so now the problem is there's such low liquidity in the leverage markets that every little move basically destroys destroys a whole lot of traders. There is a silver lining at the end of it, which I'm basically going to show you. But the one thing that is probably worth noticing is that right now, there are no more futures traders left. There is no more bullish futures traders left. You can see that the funding rates have basically gone negative. You can probably see it a little bit better on that chart over there. But the funding rates are basically hovering around negative. And we've had what is basically a complete market reset. So much so that, I mean, if you look at the fear and greed in the market, the fear and greed in the market has basically now dropped to 15. That's the lowest that fear and greed has been in a long time. And you guys will know that I've been following the fear and greed as one of the big indices that I want to follow to see when the market is bottoming. And I've been saying that I wanted like 4 or 5 days out of 7 days for the market to be at extreme fear before the market bottoms. I actually think we've got one better than that, because in the last 7 days, we've had 5 days in extreme fear. And now we're at the lowest point. Now, what do I know about the lowest point in extreme fear? Generally, in a bull market, and I'm assuming we're still in a bull market, and I'll talk to you about that in a second as to why I still think we're in a bull market and why I'm not falling into this capitulation camp. But generally in a bull market, when we get to 15, that's usually the bottom. Now, we can stay there for a little bit of time, but generally in bull markets, as you can see over here, it's very rare to stay there for very much longer, right? And so we're basically in a position now where it feels like the sentiment is entirely resetting, right? And that's exactly what I'm looking for before the beginning of the next leg up. I'm not in the camp that the bull market's over. I'm in the beginning. I'm in the camp that says that this is a correction. The correction is intended to change behavior. It's intended to change sentiment. And that only happens when you get mass capitulation. And what we're seeing now is, I think we're kind of seeing that mass capitulation. We had the futures traders completely liquidated. We got the fear and greed at 15. There are a couple of other capitulation metrics that I want to show you today, which again, when I talk about capitulation, for me, it's a positive sign. So one of the other capitulation metrics is the MicroStrategy capitulation metric. And a couple of things. One is, as 𝗙𝗘𝗔𝗧𝗪 is right here, if you look at the MicroStrategy MNAV to share price ratio, basically talking about the net asset value versus the price or the market cap of the underlying. What you're realizing is that now MicroStrategy is actually trading below the value of the Bitcoin on their books. And that is something that usually happens at the end of a capitulation. So as Fred Krueger says, he says the value of MicroStrategy is actually now less than the value of the Bitcoin that they own. Their market cap is $64.4 billion, and they hold $65.5 billion worth of Bitcoin. And this to me is one of the biggest opportunities of the cycle, because I've got a playbook, and my playbook has given me returns 100% of the time. When fear and greed is in extreme fear, I switch from Bitcoin to MicroStrategy. When it's in extreme greed, I switch from MicroStrategy into Bitcoin. That's been my best trade of the last cycle, right? Of this whole cycle. And now it's happening again. And in fact, I actually made the switch into MicroStrategy from Bitcoin, because now we're trading under net asset value, right? And as Taki says, he says, look, he says, is this not a concern for bulls? Genuinely curious for an optimistic view. Well, generally what you can see after that pattern actually plays out, we actually go back up. And so that's what I'm looking at. I'm looking at this as the capitulation. So that's the first thing. The second thing is that what I'm seeing now is I'm seeing that MicroStrategy has actually broken below the 50-week moving average. Bitcoin is still flirting with the 50-week moving average, and potentially, in a good case, it actually should bounce from here. Remember that this is Ben Cowan's level. Ben says that if we go below the 50-week moving average and we close there multiple weeks in a row, in his mind, he's going to declare the bull market actually being dead. MicroStrategy is actually broken down below it. Now, it can happen. MicroStrategy can break down below and bounce. It is quite concerning that it's happened, but my bet is that if the bull market continues, this goes up and there's a massive catch-up trade. I think, though, that what this highlights is the crazy opportunity that exists with these digital asset treasury companies. Some of these digital asset treasury companies are trading at 30% of the value of the tokens that they hold. I want to show you just one of them. So this is the TonX treasury company. TonX is the one that is run by Manny. Manny was on our show. And they hold $587 million worth of TON. They made $3.6 million worth of revenue. A lot of that is like staking revenue and stuff like that. But if you read a bit more between the lines, it says the book value per share is $10.82. Now, if you go and look at the chart, what that share is actually trading at, remember the book value of the ton that they hold is $10. It's trading at $3.60. Okay, that's like crazy. That is absolutely crazy. I think that this is going to represent one of the biggest opportunities of the cycle. One of the biggest opportunities of the cycle is going to be buying these digital asset treasury companies at under net asset value. And what I'm going to do is I'm actually going to do a show early next week where I actually analyze all the well-run DATs, because I've been doing a lot of work on this. I'm going to show you all the well-run DATs and the discount that they trade from net asset value. And let me tell you that when you see that show, it'll show you probably one of the biggest opportunities of this cycle, right? So that's the one opportunity here. I did mention to you earlier that I still believe we're in a bull market, and everyone asked me, but why do you believe we're in a bull market? And I've said it before. This is, to me, feels like a normal correction. We didn't top. None of the indicators, none of the bull market indicators actually top. But it's more something that I read yesterday in 𝗕𝗿𝗄𝗎's Substack. And it got me thinking. And what he said in his Substack, he said, I can already hear the skeptic. It seems like you're rationalizing a bear market. He says, so let's talk about why this is fundamentally different. He says, bear markets are driven by fear, by macro conditions, by loss of faith in the underlying narratives, right? Now, that got me thinking. Like, the last couple of bear markets that I went through, in every bear market, the sentiment around Bitcoin was really, really, really bad. We always thought, like, Bitcoin is not a value asset, altcoins are not worth anything, etc., etc. But now the sentiment towards Bitcoin is very, very, very good. Let me show you another thing, right? I remember two corrections. I was around for two corrections of the NASDAQ, right? The first one was the .com bubble. And that was like a big crash and a bear market, if you want to call it that. And I remember that at that time, we thought that the internet was just a bunch of garbage and we should go back to reading magazines and paper. Because the sentiment turned completely against internet companies, and that's what caused the .com collapse. The same thing happened in 2008, which, I mean, on this chart looks pretty small, but that was a very significant correction, right? What happened in 2008 is people lost faith in the banking system. People lost faith in the housing market. And that's when we got into this NASDAQ bear market, which basically lasted from 2008 to 2011. Bear markets generally happen when macro conditions turn and when sentiment turns around the underlying asset. And I think you'll agree with me that that's not what's going on here now. Sentiment is at all-time highs, institutional adoption is at all-time highs, and it's just the price which is being kept down. And yesterday I made that video, which, by the way, if you haven't watched the video yesterday, go and watch the video that I made yesterday, because it really is one of the best videos that I've made in a long time. I'll show you which one it is. It's this one here. This did I call the bottom too early? Go and have a look at it. I'll leave a link in the description below for you guys to actually have a look at it. Also, it's, for me, astounding to think the following. Guys, we're at peak fear. Peak fear. The fear and greed index is at 15. It hasn't been at 15 the whole cycle. And Bitcoin's trading at $100,000, $102,000. And we're struggling to break down below the $100,000 level. Now, will we break down before the $100,000 level? I hope not. Because remember that bet I took with Fefe on the prediction market that we set up on Rain, right? Rain is a platform where anyone can set up any prediction market. And I said, look, I must say it's a very asymmetric bet. It's a very, very, very asymmetric bet, right? Because Bitcoin's trading at 105, and I lose the bet if Bitcoin goes below 98,000, and Fefe wins if we. So the bet says that I said we'll get to all-time high before we break the low, which is 98,000. Fefe says we'll break the low. For me to lose, the move has to be down by $5,000. For me to win, the move has to go up by like $27,000. It's a very asymmetric bet, but this is how we set it up, so I'll have to live with it. Obviously, I've got a much higher chance of losing this bet, but it doesn't change the fact that the next move is basically up. And so I think what's happening now in the market is that the market is doing what it does before the end of any correction, and that is it is trying to make everyone capitulate. And when I say everyone, I agree with Raoul Paul's post where he says, so it appears the crypto markets liquidated anyone with greed, and now they want to grind down anyone with hope. He says, yep, it's frustrating, and this grind is longer than expected, but it is what it is, and this too shall pass, and the spice, liquidity, must flow. And that's exactly what I want to talk about today, because I really think that the spice or the liquidity is coming back into our market. And I think it's coming back into our market like really, really, really quickly. Why? Because as you know, the government shutdown ended yesterday, right? And as I said to you, I mean, Trump ended the government shutdown. You saw that and you got all the applause.
So with all of that,
the same applause that I get when I approve leave here at Banter.
In better shape. We went through this short-term disaster with the Democrats because they thought it would be.
Anyway, I'm not going to play it again.
And it's an honor.
The government's open now. And I don't know if you guys have noticed, but ever since the government shutdown, there's been the prices of Bitcoin has gone down. And I actually did a little bit of a table here, which basically shows the price of assets before and after the government shutdown. So this is when the government actually shut down. And this is the moves since the shutdown. Bitcoin's down 10%, ETH down 15%, Sol's down 25%. What you're realizing is that the lower you go down the liquidity curve, the higher the changes in the thing. Why did the usage just put Tron and XRP here? Okay, so what we also realized during the government shutdown is we saw a pattern. And that pattern is the pattern that I'm displaying on the screen here. It's the intraday pattern. And what you basically saw is that every day for the last couple of days during the government shutdown, as soon as the US market opened, the candles went negative every single day. We traded at 105, the US market opens, we go down to 100. We traded at 102, the US market opens, we go back down to 100. Why? Well, ultimately, I think that this all comes down to one word, and it comes down to liquidity. And I think the one thing that's going to happen now that the US government opens is that we're going to start getting liquidity back. And we're going to start getting liquidity back from multiple sources, right? What are those multiple sources? Well, I actually went and broke them down one by one by one. And I want to show you what all the elements of the liquidity are that are going to come back into the market. Now, remember that we're coming back to the market in a period where we are ending quantitative easing, right? We're ending quantitative tightening. Remember that Powell in the last FOMC basically said it's time to end quantitative tightening. That ends in 17 days or 18 days. That's when we get to the 1st of December, and we get to get quantitative tightening stopping, which will feel like quantitative easing. But that's not the only source of liquidity that's going to be coming into the market. The next source of liquidity that's coming into the market now that the government's going to get back to work is government spending starting again. And the first thing is they need to start depleting the Treasury General account, which is now running over at about 150 billion from where they want to be, because they bought but they never spent because the government was closed. And so the first order of business is to get this TGA account slightly empty and to put $100 billion back into the market. And it doesn't really end there. Although we do know that every time that the TGA account gets emptied, risk assets like Bitcoin starts to move. Because remember that the risk asset illiquid market, which is the crypto market relative to the stock market, is the one that's the most sensitive to liquidity. Another source of liquidity is the paychecks. Like, government employees did not get paid. I mean, can you like imagine that if you work for the government, you didn't get paid? And how big was that non-payment? So, I mean, it's very hard to get an accurate number. This number here says $11.2 billion. There was another one that I saw that said something about $16 billion. Missed paychecks, there it is. It says missed paychecks. Federal workers have missed about $16 billion in wages. So there's another $16 billion which is actually coming into the economy and coming into the economy fast, right? Then you've got government spending, right? And remember that in this period, governments didn't spend. They did not make spending decisions. And I managed to dig up this report, which was done by the Congressional Budget Office. And basically what it says here is it says during the government shutdown, federal outlays would be lower than they would have been otherwise. By 33 billion in the 4-week shutdown scenario, by 54 billion in the 6-week shutdown scenario. Now, we are in the 6 or 7-week shutdown scenario. So we're in about the 54 billion to 74 billion of government spending that actually wasn't spent. And that's liquidity that needs to come back into the market, right? And so you've got multiple sources of liquidity that basically need to hit the market, and they will when the government opens. And I'm not the only one who actually sees that.
Futures still show green, Dow up 130, NASDAQ up 140. There's a lot of volatility recently. Up and down is par for the course. David Nicholas joins us this morning to look at the market. The shutdown, I think it's almost over. Do you therefore see a Santa Claus rally?
Yeah, the shutdown is a big part of it. Why? Because it's drying up liquidity, Stuart. When you have so many Americans, unfortunately, that they do work for the federal government, when they're not getting a paycheck, that does impact markets. It impacts buying. It impacts sentiment. It also, the government is a big buyer of goods and services as well. So all that has come to a halt. So yes, I think you buy before the news is announced, because I do think that leads to a year-end rally.
And that's what I think. I think you need to be buying before the news is announced, because now there's going to be a lot more stimulus. You got the TGA account, you got government employees basically getting spending, you got liquidity being put into the banking system, you got governments starting to spend again. And then you actually might have another source of crazy liquidity. And by the way, when this happens, this is why usually markets rally after government shutdowns, because the liquidity starts flowing back into the market. And you can kind of see with all the government shutdowns, except barring one, which was in 2018, generally the markets actually land up rallying. Then you've got another source of liquidity, which to me was a kind of an unexpected source. And to be honest, I kind of thought that Trump was bluffing when he spoke about the $2,000 stimulus checks that he's about to give Americans. I kind of thought that Trump was trying to frame the Supreme Court by offering, he was playing 4D chess, right? He was offering the public the $2,000 stimulus checks, which was from the tariffs. And then if the court ruled against him, then he was going to say, well, you see, now we've got to take it away from you because the court ruled against us. But it kind of feels like it's a real thing. And the reason why I think it's a real thing is because yesterday 𝗏𝗏 Bessent actually came out and confirmed two major stimulus plans. The first one is a $2,000 rebate, which by the way I thought was a complete which was complete garbage. But he's talking about any families earning less than $100,000 could get a direct $2,000 rebate. And then he talks about the Trump Accounts program, which is every child born from 1 January 2025 for the next 3 years will receive a $1,000 investment account immediately invested into the US stock market. So literally, they're going to count the number of kids born and invest that amount of money into the stock market. So my suggestion to you guys is go and have kids. You want to pump the market, go and have kids. And if any of you need any assistance and you're female and you're no, I'm kidding. Guys, this is the family show. Anyway, 𝗏𝗏 Bessent's pretty serious about this. I mean, listen to what he said.
That's the most financially responsible thing to do?
Well, there are a lot of options here. The president's talking about a $2,000 rebate, and that would be for families making less than, say, $100,000.
Have you decided on that yet?
We haven't. We haven't. It's in discussion. But the other thing to think about, Brian, is that what we did with the tax bill is actually financing the president's no tax on tips over time. So Security and the big refunds you're going to see are a result of that. So that's another payment to the American people. And then the other thing you're going to see in the middle of the year are these Trump accounts. Every child born retroactively to January 1, but for the next 3 years, is going to get a $1,000 account that's going to be invested in the U.S. stock market.
Ladies, listen, we've got 3 years to get to work. 𝗏𝗏 Bessent just confirmed it. My number is in the link below. Don't you dare put my number there. Don't you dare put my number there. Yeah, so that's another thing. And if Trump does this, just to give you an idea of how big this is relative to the COVID stimulus, right? This is about the size of any one of the, or any two of the COVID stimulus ones combined. $440 billion might actually come out of this. So this is where we're at. Like the government shutdown could be ending, and we could be getting a whole lot of stimulus. But there are one or two curveballs, and I want to talk about the one or two potential curveballs. And one of those potential curveballs is data. You know, today we were supposed to get the inflation numbers. We ain't getting them. There's no inflation numbers. You gotta ask yourself, why are there no inflation numbers? I don't know if you saw this, but this is what Carolyn said. Carolyn said yesterday.
Could end up decreasing fourth quarter economic growth by 2 whole percentage points. The Democrat shutdown made it extraordinarily difficult for economists, investors, and policymakers at the Federal Reserve to receive critical government data. The Democrats may have permanently damaged the federal statistical system, with October CPI and jobs reports likely never being released. And all of that economic data released will be...
So, you know the CPI data? Well, it's never being released. October CPI data, which we were supposed to get today, it's never being released. You need to ask yourself a question. Why are they not fighting to release the data? Maybe because they know that the inflation went up and that would ruin the chances of a rate cut. And that's pretty much what the market's telling you, right? The market's telling you because there's no data, look at that. It's actually swung to a 50.1% probability of no rate cut. And that's what Powell warned Trump about in the last FOMC. He said, look, if I don't have data, I can't cut rates. And now there's a big feud inside. I actually want to see what investing.com says, like, because it was supposed to be today, October 24th. And it says actual 3%. No, that's the October ones. You see, there's no, that's it. There's no release date. So it's going to be like, it's forever going to go September, October, and then it's going to go December because of the Democrats. Or at least that's what the Republicans say. Anyway, now there's a big feud inside the Fed, right? Some members of the Fed are saying they're happy to chill and pause. Like President Susan Collins, she said she supported the decision to cut rates by 1/4 point last month, but she's comfortable standing still for now. Given my baseline outlook, it would be highly likely be appropriate to keep policy rates at the current level for some time to balance the inflation and employment risks in the current uncertainty environment. Absent evidence, no evidence because there's no data, of a notable labor market deterioration, I would be hesitant to ease policy further. And I mean, on the other side, you've got Kevin Hassett. He says Hassett has high regard for Jay Powell, but the policy disagreements, blah, blah, blah. And he basically thinks rates could be a lot lower. So there's a big like push and pull inside the Fed. So now it's like 50-50. 50-50 whether we're going to get a rate cut. Now, let me know in the comments whether you think we're going to get a rate cut or whether you don't think we're going to get a rate cut. That's what I want to know from you guys. What else is it? Let's quickly look at the altcoins. Not much happening. Aerodrome dumping after the news that it's merging with Velodrome. Canton, I'm waiting for Canton to go below 10 cents. And they're going to be buying it like a mofo. All right, listen, guys. Tomorrow, we've got a massive show for you. You know who I managed to get on? Is Vlad from Robinhood. And that's like going to be one of the best shows that we've ever had. Like, so tune in tomorrow to the banter. Also, if you are obsessed with crypto and you want to join a full-time crypto team, but you got to be one of those people that's like basically in Telegrams, in Discords all the time, that you really understand crypto and you want to learn more and you want to be part of a team and you really want to be part of our research team, then there's a link below to become one of our researchers. We're looking for full-time people. You must have been in crypto for 3 years. You must watch more than 3 crypto shows a day. You must want to go full-time into crypto. And you must be able to work European or Singaporean hours. And, I mean, if you want to be part of our team, it's hard. It's really, really, really hard. But I think it's very, very, very rewarding. All right. If you want to, there's a link below. Apply. I'm looking for 3 or 4 more full-time researchers. We've hired quite a few. Yeah, and I look forward to working with you if you actually make the cut. Anyway, chaps, I'm off to Lisbon for a conference. I'll see you guys again tomorrow. Until then, trade well, my friends.